Hello, this is Ernest Burley Jr., your certified financial planner, your chartered financial consultant, your NFLPA registered player financial advisor, your investment advisor representative. I hold the Series 6, 63, and 7 that allow me to offer securities products to clients, and your author of 2 books on money management. Money Management, Easy as 1, 2, 3, and Money Management from Grade School to Grad School. I ask that you guys buy those books out, go to Amazon and just flood them and buy them by the what they call them caseload. A lot of people have already purchased them and they're teaching individuals across the country, like in different states. There are organizations that are teaching people, whether they be children, youth, and adult, financial principles and money management principles and some insurance concepts from those books. So I appreciate that. I thank you guys in advance who are going to do that. I ask that you spread the word and buy out all those books so they have to call my publisher for more books. I'm also a licensed insurance agent with over 30 years experience in the industry, and I've been in business for over 25 years, helping clients all across the country. So state lines don't constrict or restrict Burley Insurance and Financial Services from helping individuals all across the country, whether it be life insurance or long-term care or in securities products, whatever they may be, okay? So I specialize in wealth management, investing, so like IRAs, 401k plans, investment portfolios, things of that nature, asset protection, also asset growth, financial planning, whether it be basic financial planning or comprehensive financial planning, all different types of insurance, whether it be auto or home or investment properties or life insurance, long-term care, disability, contractors, commercial policies, all different types of policies, right? And also athlete management. So as an NFLPA registered player financial advisor on the football side, the NFL side, I'm in that arena. And also I'm an I'm an NBPA certified player agent on the NBA side. So I can get individuals opportunities to, fulfill their dream of playing professional basketball in the NBA or overseas. FIBA, I'm FIBA licensed too, to get individuals opportunities there, okay? So the purpose of this podcast is to educate, to enlighten, to empower you with clear, objective, unbiased information so you can make some great decisions for your family, your friends, your church members, those that you are connected to, okay? So that's the purpose of it, just clear, objective information, because I want you to have the good information so you can make the good decisions, all right? So today's podcast is called The Dirty Dozen. 12 lame objections used to avoid life insurance. Okay, so I'm getting in some people's grill today. Okay, and there's so many. I didn't want to forget any of them, so I just have them listed. I'm just going to go right on down the list here. So this is the dirty dozen, right? And I can think of some more. I'm pretty sure, but we're going to stick to the dirty dozen. 12 lame objections used to avoid life insurance. I'm going to attack this. Well, let me say not attack. I'm going to address some of these lame objections that I've heard over the many years that I've been in business and having discussions with clients when they either start talking about life insurance or they want to avoid that conversation altogether. So I'm putting some people on blast. I'm not naming any names, so don't worry about that. So I just want us to be responsible and let's think through our reasoning, right? And let's do the right thing, okay? So number one, here's lame excuse number one. And these are in no particular order. I'm just going to go through the dirty dozen. They can be in any order. So just number one, first one. The first one, I have life insurance on my job, or I have group coverage on my job. That's kind of one of the lame excuses. Now that's great. I love it that you have group coverage because that's normally inexpensive. I've only had 1 or 2 situations where it was more economical for me to provide that person life insurance as opposed to their group coverage, because the group was charging them a lot of money, which is that was kind of crazy. But in either case, group coverage is normally going to be very inexpensive. Now, the group coverage is normally going to be term, which means it is eventually going to terminate. So eventually that coverage is going to go away. Another problem with group coverage is if you leave that job, normally it's not going to follow you. So you're not part of the group anymore, so you don't get to keep the group coverage, right? So that's another problem. Now, if you can take it with you, then that's great, okay? But you have to look at 2 things: the conditions of the policy. So two things you want to think about that may change. The premium may change when you take that policy, if you can take it with you, and the coverage may change some kind of way down the line. So that's the information you want to know. If you can take the policy with you, how's the premium going to change over the duration of the policy, and how's the benefit going to change over the duration of the policy? Okay, that's 2 things. Now, It's usually not enough coverage also. Like the group coverage is usually not enough based on what people want. Not what I'm saying, what people say, how much coverage they want. The group policy normally is not enough. People normally realize that they want or need their own private or personal life insurance when they get close to retirement or once they retire and all they have is that group coverage. And now they realize, man, I need some personal or private life insurance outside of my job. But now they're 60, 70 years old and they can't go back 30 years to get the policy. I'm trying to prevent that from happening to you, right? So don't bring up this lame excuse saying you have group coverage or coverage at work and you don't need anything. No, you need something outside of work. Okay, so that's lame excuse number one. Lame excuse number two, I don't have any dependents. I'm single. I have no liabilities or no debt. Okay, I get it. All right. So what you want to do is get protection at your youngest age, which is now. You're never going to be younger than you are right now, right? So ideally, you want to get coverage the younger you are because you want to lock in the rate at that young age and also lock in your health because you can't guarantee what your health is going to be from year to year, well, day to day, much less month to month or year to year. So those are the two things, your age. So the older you get, the higher the premium is going to get, and your health. You don't know what your health is going to be down the line. So lock in some coverage while you're young. I don't care if you don't have any dependents, you're single, you don't have any debts or liabilities. Lock in something now because you may get married next year or 5 years from now, whatever. And then you want coverage because you have a spouse, you have children, now you have a home, and now you're trying to get coverage 5, 10, 20 years later after you get married. That's not the ideal way to do it. You get it at your youngest age, which is now. All right, so that's it for lame excuse number two. Lame excuse number three, I can't afford it right now, or it's too expensive. Now, this is all about priorities, okay? What's in the best interest of your family? What's in the best interest of those that you love and care about? I bet I can look at what you're spending every month and between Chick-fil-A and Starbucks and Dunkin' Donuts, Subway, Zaxby's, whatever your thing is, I would venture to say I'd see $100 to $200 a month just blown on that stuff alone, not even looking at anything else, right? So it's about priorities. When you're spending money on this other stuff, basically you're spending your money on poop, right? Well, and by that I mean, I know y'all like this guy's crazy. So by future poop, I mean all of that stuff I just mentioned is stuff that you're going to poop out, right? Subway, Zaxby, Starbucks, Dunkin' Donuts, all this is stuff you're consuming, and it's going to go right in the toilet. Now, I know you want to enjoy, some of that. I get it, but just don't use this as an excuse because you're blowing a ton of money elsewhere that's really not doing you any good, right? So lame excuse number three. All right, here we go. Lame excuse number four. I have enough coverage. No, you don't. It's very rare that I've seen a person have the amount of coverage that they want. I'm not saying the amount of coverage I think they should have. I mean, like after they've done an actual life needs analysis to say, okay, well, let me cover these various areas, and they never have enough coverage. Very, very few people say, okay, I need this amount of coverage and I already have that amount. It's very rare. So how did you come up with that amount? Did you do a life needs analysis? Do you really know how much coverage you need? When you do that, 9 times out of 10, the amount of coverage you have now is not adequate, right? But if it is, it is. I'm just saying throughout my experience of 25 years plus in business, that's what I've run across. People rarely have the amount of coverage they want, not what I want them to have. I want you to have the amount of coverage you want to have. But when you sit down and look at the numbers, you don't have enough coverage normally, okay? All right, number 5, lame excuse number 5. My parents have a policy on me. You're grown. You are a grown behind adult, and you're talking about what your mama or daddy have for you. I mean, I've actually heard that excuse before. Like, again, how old are you? You're grown. Get your own policy. Don't be talking about what your mom and dad have for you. That's, okay, let me move on. I'm going to offend some people. I'm sorry. But please don't rely on some policy that your parents got for you and you're a full behind grown adult. You are responsible to have your own policy, okay? All right, lame excuse number 6. I just bought a policy. Okay, well, I hope the policy is the right policy for you. Okay, I'm trying to, I hope it's the right policy based on the needs and desires that you have as far as the coverage you want. So what type of policy is it? How much protection does it provide? Is it term or permanent? I know these sound like basic questions, but a lot of times I've had to rescue people from policies where they thought they had a particular policy, but they did not. They had the wrong policy, or I had to let them know that it's not what you think you have, right? As a matter of fact, I just had a client recently email. I get these all the time. People email me the policies. I can take a look at it. I was actually happy this time because this person emailed me the policy. It wasn't the type of policy that the person thought they had, but it was a permanent plan of insurance. It was a permanent policy. So I was glad to see that. That is very rare. Normally, if someone sends me a policy, it is not what they think it is. And they end up shocked when they realize, oh man, I messed up. Okay, so if you just bought a policy, hey, let's take a look at it and make sure it's the policy that you want and the policy that you think you have, okay? All right, lame objection number 7. I heard life companies don't like to pay when it's time to pay. Well, that's not true. It's a contract. The life insurance policy is a contract. They have to pay, right? If a person passes, they had life insurance on them, the company insured them, they have to pay it unless there was some violation in the contract, right? So that's why I've seen it come back. I've seen it happen just, in my own experience. I've had it happen where a life insurance company did not pay a benefit, but that was because the person lied on the application. They lied on the insurance application. So if you lie on the application and then you pass, and whatever condition or whatever situation you had was something that they would not have insured you for, then yes, they're not going to pay for something like that. But if you made all the criteria, the conditions of the contract, they're going to pay. That's just, they're going to pay. Okay. All right. So that's a lame excuse. They pay. Life insurance companies pay all day, every day. Okay. Lame excuse number 8. Why would I buy life insurance on my children? Okay, so I'm going to give a little leeway here because I can understand how that might not be something that's clearly evident. But the reason you do that is to lock in their rate and their health at that younger age. Like I said before in a previous question, the best time to get life insurance is at your youngest age, and you're not going to get any younger going forward. Okay, the youngest you're going to get is like right now. So with children, lock in their age. They're very young, normally healthy. Lock in their age, lock in their health, so that policy is good to go for life, okay? And I also recommend adding what's called a GIO, or some companies call it a GIR, which stands for Guaranteed Insurability Option, or Guaranteed Insurability Rider, which guarantees that child to be able to get more life insurance as they progress throughout life, normally starting in their mid-20s, going through like their mid-40s. They're guaranteed to be able to get more life insurance at those stages in their lives, regardless of their health, regardless of their medical condition. So always add that rider onto policies for children and young adults, okay? Lame excuse number 9. I have some health conditions that may make my rate high or make me ineligible. Okay, I get it. So some people do have health conditions. That's understandable. But have an agent do some research for you. A person like myself or someone else, you want to make sure a person has access, make sure the person has access to multiple insurance carriers, because different carriers have different appetites. Some carriers are more lenient with their underwriting, and they'll write somebody with some health condition, versus some are more conservative and they want people to be very healthy. So do the research. There are a ton of questionnaires out there. I get questionnaires all the time. I send them out to clients for diabetes, for heart conditions, for whatever. And once I get that information back, I research it with my back office, and they let me know, okay, well, this person, they're going to be ineligible, or they'll be rated at this amount, or what have you. But get the research done. Don't make an assumption. Have some research done, and then find out if that's really the case for you, okay? All right, so there you go. That's lame excuse number 9. Lame excuse number 10, I'm too old, okay? Issue ages can get pretty high, right? I've issued policies for clients in their 80s. So how old are you? Are you 90, 100? Okay, that may be the case for some clients who are well up there, but most people aren't in that situation. So, you want to, like when you're older, you want to gear yourself towards permanent coverage, because your options are more, you have less options the older you get, right? So term gets further and further away from an option for you the older you get, and you should be looking more towards permanent type of coverage, right? So yeah, that's not a good reason either, right? So like I said before, the issue ages, which means the age at which a company will issue a policy, they can get pretty high. So like I said, I've issued policies for clients in their 80s. So Let's not let that be an excuse. All right. Lame excuse number 11. Life insurance is a scam. Now I'm just going to ask that person or those people to just go over and sit down somewhere, because that's just foolishness, right? It's just silly talk. It's a life insurance is a very important tool for mature, responsible adults, people who want to provide for someone or something that they care about or they love, right? Whether it's a person or people or organization or what have you, it's a very, very important tool used to provide for those that you leave behind, or some organization that you want to be a blessing to. It's not scam. What in the world? So, like, lame excuse number 11. Lame excuse number 12. I don't need life insurance. Okay, all right. So maybe not, right? Let's explore that. Now, are you a multimillionaire with some of your resources allocated to provide for loved ones? If that's the case, hey, you may be good to go. Or do you have no dependents or people you want to leave money to, right? So there are situations where some insurance. Okay, so I get that. I'm all about objective information based on each person's situation, right? So this may be the case for you. But by the way, multimillionaires have a lot of insurance. They insure their homes, their cars, their jewelry. So many multimillionaires can self-insure their home. They can self-insure their car, like the liability. They can self-insure their jewelry, but they don't, because it would be stupid to do that. I know stupid is a strong word, but it would be. Why would a person say, well, I have a $5 million home. I'm going to put off $5 million off to the side in case the house burns down, plus the personal possessions inside. That's another $2.5–3 million or more, right? Or self-insure my car for liability. Why would you do that? No, they don't, right? You pay pennies on the dollar for the insurance to insure that home, to insure your car, to insure your jewelry. Some celebrities and stars, they insure body parts, like they insure their legs or whatever provides for them a source of income, right? So yeah, don't say you don't need it unless you really don't need it. If you're in one of these situations, then I get it, okay? So here we go. There are some stars and some people that are multimillionaires that actually did not secure life insurance, and they didn't protect their loved ones. Their loved ones and their estates suffered as a result of that, right? So I'm not going to put any names out there, but I'm sure you've seen it in the news where these big mega stars have passed and now their estate is like gobbled up, like half of it going to estate taxes and crazy stuff like that. So they could have avoided the estate tax taking up all this money out of their estate and not leaving as much money to their loved ones by just simply getting a life insurance policy. It's just, whoop. All right, so, okay, and that's it. That's the dirty dozen, but I'm gonna give you a bonus. This is a baker's dozen. Here's a bonus one here. I'll just save the money instead of paying premiums. Now, check out my podcast on this, because I did a podcast recently on, does it make sense for you to buy life insurance or put money into a savings account instead? Trying to save at a rate to match or exceed a life insurance policy is not viable. It's not going to work, right? It just does not work. You can't out save a life insurance policy. You just can't do it. You're paying $10 a month or $100 a month, where you could have paid $100 a month into a life insurance or for a life insurance policy that's going to give $200,000 to someone, versus you're just $100 in that savings account, or $1,200 after a year. So I did a podcast on it. Just check out that podcast. Life insurance is pennies on the dollar compared to your dollar for dollar going into that savings account. And that's it. That's the 12 lame objections that people use to avoid life insurance. Okay, so let's not be one of those. Okay. And actually, it was a baker's dozen because I gave you an extra one right there. Okay. All right. So that's it. Today's recap is don't just make up like invalid excuses because you don't want life insurance. If it's something valid, okay, I get it, but don't do it just to avoid the conversation or to just do the right thing. Use proper reasoning, proper logic. I've just canned like a dozen name excuses, and there are more out there. I just, put a dozen out there. Okay. All right. The takeaway is more than likely you need some type of life insurance, whether it be term, permanent coverage, or what have you. Just make sure it's the right policy for your situation based on what you want or what you need. Okay. That's all I'm asking. That's all I'm asking. And this is for your benefit, not me. I'm not going to get any of the benefit. This is for your family, your loved ones, your godchildren, your grandchildren, your church, your philanthropic organization, wherever you want to leave the money. It's for that. So let's prioritize, make sure that we're doing that. Okay. All right. So that's it. You want to connect with me? Very easy to do. You can just call my firm at 301-262-2600, or you can email me from my website, ernestburley.com or ernestburleyjr.com, or you can email me directly. My email address is ernest@ernestburleyjr.com. So it's very easy to reach out to me. I got an email just recently from a podcast. I forgot what it was about, but I get those from time to time. I actually get them quite often. So I look forward to them because I really want to help out in an objective way, right? So you don't have to do anything with me. I just want to give you the objective, clear, unbiased information so you can make the right decisions, okay? All my podcasts are on YouTube. So I want you to go to my YouTube channel, Ernest Burley Jr. Ask all of your friends, your family members, your church members, your coworkers, your employers, everyone you're connected to and acquainted with. Say, hey, go check out this guy's YouTube channel, Ernest Burley Jr. Subscribe. So subscribe first and then click around in there because I have a ton of podcasts talking about everything from infinite banking to real estate. So real estate or real mistake, whether you should lease a car or buy a car, pay a home off early or not, just it's all how to increase your credit score. All different types of topics in there. So please spread the podcast to those and ask them to do the same thing and ask them to subscribe to the channel. I'm so pleased to be getting so many subscribers every week. So I ask that you ask everyone to subscribe and get those subscriptions up because I think it's very good information on there to help everyone. Okay. That's it. That's it for today's podcast. I do have to read off my disclosure since I did mention the fact that I'm a financial planner. I do investments and things of that nature, financial planning. All right, so here we go. Burley Insurance and Financial Services, Inc. That's 13621 Annapolis Road in Bowie, Maryland, 20720. So again, that's Burley Insurance and Financial Services, Inc., 13621 Annapolis Road in Bowie, Maryland, outside of DC. 20720. Securities and investment advisory services offered through Next Financial Group, Inc., member FINRA and SIPC. Burley Insurance and Financial Services, Inc. is not an affiliate of Next Financial Group, Inc. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Past performance does not guarantee future performance. All the views expressed are those of Ernest Burley Jr. and Burley Insurance and Financial Services, Inc., and not those of Next Financial Group, Inc. Next Financial Group, Inc. does not provide tax advice. And that's it for today's podcast. I appreciate y'all tuning in. Until next time, y'all take care and y'all be safe out there.